Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday's action, the NASDAQ led the way up, but the other markets were very flat to just slightly down, with the NASDAQ up 0.5, Russell down 0.1, and the S&P down 0.1. As I went through a lot of detail in yesterday's video, I talked about the RXT sell on the Russell and on the S&P. They were down slightly. We're seeing further weakness overnight tonight, but the NASDAQ, as I mentioned, continues to have a slightly more positive configuration than the other markets. I'll go through all these details here in a few minutes in the technicals. As we look forward to today, there's no news coming out today that's materially going to affect the markets. And as I mentioned in yesterday's video, we're going to be stuck on market sentiment, which is very mixed at best. It won't be until Thursday, when we get the claims and the continuing claims numbers, where we'll have anything really to look at from an economic viewpoint. But once again, we hear a little rumbling in the background about stimulus. And as I've been telling you, they're just not going to do anything. And even the stimulus that they're talking about doing, they're talking about a $300 per week unemployment number, no direct money coming out. So we're going to be on our own going forward. There's a number of states that are looking to lock down once again. And so it's almost as if when Biden comes in, they want to shut this thing down to the point so maybe it looks better when it comes back. Meanwhile, the American people and the populace, and not just here in this country, but in Europe and other places, are the ones taking the hit. So we're going to have to see how it plays out as we go forward. I am looking for a slowdown in the economy, but it looks like maybe this type of activity could signal a further slowdown. Also, as I look at the database, we're starting to stall a little bit, and it looks like we could see some retracement in the short-term database, and I'll go through that as well in a few minutes. One of the things that have been really hot over the last month and a half has been that leadership change, and we're seeing that start to just kind of grind out a little bit. I mentioned about 3 weeks ago that I thought this rotation would go into a very choppy sideways range, and that appears to be what's happening. The NASDAQ is trying to claw back some of that leadership that it had before. We saw Apple, and of course Tesla continues to move very strongly. As far as everything else goes, we're just seeing this grinding. You know, yesterday energy took a big hit, down 2.5%, but it's up almost 30% since October. So this has been a very hot sector. So a lot of these moves that we've seen are starting to consolidate. When I go through the database tonight, I'm going to show you the Buffett strategy, which is the airlines, including Boeing, just how that is performing, because I think there's some interesting things to look at in this portfolio, because there is some forward-looking ideas that are starting to form here, and we're starting to see some real traction start to come about. So let's go ahead and take a look at the charts, see how they're set up for Tuesday. As I begin with the WaveTech Database, looking at the daily models, we did see 175 buy signals and about 375 sell signals. So we have a slight negative rotation. We dropped from the 79% long down to 78.49. So nothing material yet, but we are starting to see it stall right at this 80% level, and we're getting closer and closer to getting overbought every day that goes by. We're currently at the 8th of the month, so another 12 days or so, this market is going to be very overbought if we just maintain in a sideways range. And this database will give us a bit of a clue on the rotation as we go forward. I mentioned in the opening comments that we would look at the Buffett strategy, it's up 113% on this year. So those of you that watched the Buffett strategy going back into May when Warren Buffett sold the airline stocks, I built this portfolio on the fly, and this is the activity that we've seen since then. We did see it come in back into markets in August, drifted back down, and then we saw another buy here. As we look at the open position run, you'll see that right in 1110 was where 11.6 is where Boeing came in. It's now up 52% since the purchase. Alaska Air, you can see we've got all of these in here. There's 9 open positions. All of them came in on 11.10. All the airlines came in 11.10. They're up varying amounts, but anywhere from about 21 to 33%. So the airlines are starting to look forward. This is what I was talking about. We're starting to see that folks are starting to look forward to travel. Maybe there's going to be ultimately some kind of deal to backstop the airlines. I still think that's in the cards. That's why it was so absolutely ridiculous when Warren Buffett sold out the stocks. He had to know that they were not going to let these things go down. So he basically sold the whole, and I suspect he was selling on the way down. But regardless of that, there's been a tremendous amount of opportunity here in playing just a simple portfolio. This is all our daily models, just buying in and trading these on a short-term basis. I'll continue to cover this as we go forward, but the point of showing this to you is that you realize that there are opportunities out there, and there's a lot of things that are going on in the economy that are starting to rotate a bit, and that also has a lot to do with the leadership that I talked about, the NASDAQ versus the Russell and the mid-cap and those type of things. We'll start off with looking at the Russell, but beginning with the spread. As I said, we're starting to see some higher level consolidation. The spread has moved off the lows pretty substantially since October. I continue to expect to see this move up as we come into Q1 and Q2. Most of this is likely going to be driven by generally higher interest rates as we go forward, and some other elements that I'll be talking about as we come into Q1 and Q2. As we review the daily Russell chart, as I mentioned, on Friday, we did get that RXT sell. We were basically flat yesterday, but I continue to expect to see this market move back toward at least the S2 level, 1878. I don't see a big decline by any means here, but we should continue sideways for another day. Now, one of the concerns, as I mentioned, is the momentum starting to bleed off, but it's still very substantial. PPM1 is below its second derivative. PPM2 is turning down, and PPM3 is starting to drift lower, but they're drifting lower with very robust numbers. For instance, PPM1 is 0.58, PPM2 0.62, PPM3 0.37. Anything over 0.25 positive is an uptrend. So we're definitely in an uptrend, and the 10-period moving average is going to be the dominant point or the demand line in this pattern. So that will be at the 1849.84 level, and that is going up at about 10 handles per day. So that'll be 1859. And you can see as we look at the market grid, the grid for today is the STX is 1866. So that'll put us pretty close to where the 10-period moving average will be, and I don't really expect to see that much weakness, at least not for Tuesday. Maybe we come into Wednesday, we might see continuing weakness, but we usually get about 2 days sideways, and then the uptrend is likely to resume and start to move higher in the pattern. That'll be dependent on how the next couple of days actually trade. As I reviewed the S&P futures, as I mentioned, the futures did not get the RXT sell. It did come in on the cash, but we are seeing a continuing drifting. Yesterday was down just a touch. We're seeing more weakness overnight. We're down 9 handles. We have been down to 37.76. As we look at the market grid, you'll see that S2 is 36.75. So we basically have done an S2 trade already tonight. R1 is 36.98. The high's been 84. We could trade up toward R1, maybe see an attempt at a rally. We'll at least see an S3 today, which would be a 36.66 level. That would be the most likely scenario. If we happen to hold the S2 that we printed overnight, we could see it print up to 36.98. So that would set up an R1 S2 trade. My expectation is that we'll extend that down to an S3 on the downside. As we look at the S&P daily, it actually confirms exactly what I just covered in the futures. The interesting thing, though, is the daily does not have the same profile as the futures do, and we're about to cross through the second derivative on PPM2, which is significant, just suggesting that we're going to continue to move down toward that 10-period moving average, 36.49 yesterday, moving up about 14 handles per day. So that's going to put us right around 62 or so. So that'll put us just a little bit below where the STX number is today. As we look at the market grid for today, it's 3667.84. So look for an S2 number minimum, probably an S3. I don't think we'll see an STX, but we're going to continue to drift, and we're likely to see PPM1 turn down. PPM2 is about to cut through its second derivative, as I mentioned a minute ago, and PPM3 is trending down as well. So this is that hesitation I'm talking about, but overall the underlying patterns, the underlying trends are still positive and still pointing to the upside. But a few more days of lack of momentum or resetting and moving this trend higher could start to signal a much more significant corrective phase. The next market I'll cover is the NASDAQ futures. The daily is showing down 19.5 handles. We have been down to 12,554. That's just above the S2 number. I've been talking about this for a number of days, that the NASDAQ has a generally more positive configuration than the S&P or the Russell has. So this is where we're starting to see it claw back a little bit. But I have to tell you that with tonight's action, we're starting to see some concerning things happen with the PPMs. PPM2 is right at its second derivative. PPM3 is trying to cut through, and PPM1 is still positive, and it's also positive at a 0.55, and this is calculating with the overnight weakness. So this is just telling us that we're going to move toward that critical number, just like in the S&P and the Russell, which is that 10-week moving average. This is a simple average, and that number is at 12,383, and I don't see us getting through that. You can see by looking at the market grid for today, 12,489 is STX, so that would be below STX. I don't see us getting through that. The other thing I want to point out on the NASDAQ is we are getting the market grid to narrow down, and when that happens in this type of configuration, it usually suggests that we're going to see a correction, and depending on what happens over the next couple sessions, this could set up a move down toward the medium average, which would be at 12,123. I'll cover this after we see what type of action we get on Tuesday. The final market I'll cover tonight is gold. Gold has managed to get a substantial amount of traction, and a lot of that has to do with the dollar stabilizing, at least at a very low level. Even though it's not continuing to decline, it is driving some money back into gold. And I talked about this going back into the last couple of weeks, that the 1766 number was going to be a substantial support level. Well, we hit that. Now we're $100 higher, and we continued yesterday. I thought we would hold at the 1856, 1860 level. It went right through that level, traded to 1873, and overnight we've seen a high of 1876, and we're coming up toward that 40-period moving average at 1881. That number also maps out really good to a 0.382 retracement of this pattern, which is at the 1880 level. So we're coming into, I think, a reflection point. But as we look at the PPMs, PPM1 is just blasting off, and all we need is PPM2 to take out its second derivative and PPM3 to do the same thing. They're right there, and that will set up a larger bottoming pattern. As I mentioned in yesterday's video, my expectation as we look at the weekly chart is that we could set up a substantial weekly bottom. It's going to take a number of weeks before it's in position where we're going to see a lot of movement to the upside, but we're definitely seeing the pattern set up. There's a lot of work to be done on the PPMs before we're going to be in a rally mode, but we're likely to stay at least within the market grid here. And 1879 R2 is that second number. It's the 40-day moving average, the 10-week moving average, 1887, and there's one of those clusters of numbers here. So we're probably, for the most part, up at the upper end of where this market's going to go. I don't expect to see it move a lot higher from there. We could go all the way back to 1922, which would be the 21-period moving average, but I don't see the setup here in the PPMs to tell me that. So expect to see this thing stall out somewhere here between 1870 and the extreme around 1885, maybe 1890, and then see a reversal back into the grid. Possibly, if it gets up that high, 1860 will be the support now, since we've broken through that. This will complete the video for tonight. Thank you for watching. We'll talk to you tomorrow night.